Good morning, smart professionals. Today is Thursday, 21st August, 2025.
Welcome back.
And welcome to your daily news update on Blip Brief, small but almost everything updated daily.
That's us.
We're diving deep into the most crucial developments from the last 24 hours, giving you that essential shortcut to understanding not just what's happening across the Indian economy, global markets, corporate boardrooms, and geopolitics, but, crucially, why it truly matters.
Exactly.
Get ready for some surprising facts and the deeper stories behind the headlines.
Absolutely. Our mission here is really to cut through all that information overload,
So much of it.
way too much. We try to connect those seemingly disparate dots that pop up in the news and distill the core insights that can genuinely impact your understanding and, well, your decision-making today.
Makes sense.
It's about revealing the patterns and implications you might just miss in a quick scan. So let's jump straight into what's been moving the needle.
And wow, what a needle mover it is. We absolutely have to start with the big news out of India.
The tariffs, right?
Yes. U.S. President Donald Trump has just imposed a staggering 50% tariff on India.
50%.
And if that wasn't enough, there's a specific 25% penalty layered right on top,
Just for the oil.
specifically for India's continued purchase of Russian oil. This isn't just a tariff. It feels like a very pointed message.
It really is. And the immediate financial implications are pretty substantial.
How substantial are we talking?
We're looking at a potential hit to Indian exports with an estimated $48 billion.
Wow. That's a huge slice of the pie.
It is. But what's truly fascinating here, and maybe a critical perspective for anyone in business, is how figures like Uday Kotak are framing this. He sees this not just as a challenge, but, and I'm quoting him here, an opportunity to get out of comfort mindset.
Interesting phrasing. So a forced push.
Exactly. It isn't just corporate jargon. It implies a forced reevaluation of India's entire global supply chain strategy, you know? A push towards greater domestic manufacturing, more self-reliance, trying to insulate the economy from future shocks like this, even if it means some short-term disruption.
And is the government reacting?
Oh, yeah. The Indian government is already responding, planning new factory clusters and pretty significant reforms designed to soften this blow and pivot towards that internal growth.
So how is India responding to this, economic storm? We're seeing a very deliberate strategic dance, aren't we?
We are.
India's External Affairs Minister, S. Jaishankar, is openly calling for Russian companies to engage more intensively with India,
Doubling down.
effectively doubling down despite these new U.S. tariffs. That's a pretty bold geopolitical move, wouldn't you say? Shows commitment to certain partnerships.
It absolutely highlights India's complex balancing act on the global stage. And the rationale behind it is quite clear, really.
Which is
Russia is assuring India a steady oil supply, and crucially, at a 5% discount.
the discount. Always key.
Essential for India's energy security. And you see major players like Indian Oil and BPCL continuing their purchases. They recognize the economic benefit.
Makes sense.
Furthermore, Russia is actively looking to reduce its trade imbalance with India
Okay.
by welcoming a significant increase in Indian exports. So there's a mutual interest there, too.
And this isn't happening in a vacuum, right?
Not at all. Zooming out, this isn't an isolated incident. India and the Russia-led Eurasian Economic Union, the EAEU,
Right.
they're already agreeing on free trade agreement terms. That signals a deepening of ties that actually predates these specific tariffs. And this is all unfolding while India and China are cautiously navigating their own delicate relationship.
Trying to mend fences.
Trying to mend ties, even amidst these lingering tariff clouds. Though it's worth noting, India's pretty substantial $100 billion trade deficit with China, that remains a persistent concern in the background.
Okay, let's shift focus a bit. Look at India's domestic economic pulse. We saw core sector growth hitting 2% in July.
Yeah, a bit lower than maybe hoped.
And the interesting twist there, turns out heavy monsoon rains significantly impacted energy and mining output.
Ah, the weather factor.
Exactly. Kept that number lower than anticipated. But on a more optimistic note, there's a clear consensus, isn't there?
About the growth target.
Yeah. Among policymakers, economists, India absolutely needs to achieve an 8% yearly growth rate.
It's seen as vital,
Yeah.
to navigate these complex geopolitical uncertainties and really capitalize on the demographic dividend.
That 8% target is definitely ambitious, but as you say, vital. Now, looking at the banking sector, net interest margins, or NIMs, that key profitability measure.
Right, from core lending.
They've slipped to a three-year low of 3.98% in the June quarter.
Yeah, that's largely a ripple effect from the RBI's repo rate cuts.
How so?
Basically, banks' lending rates adjusted downwards faster than their deposit costs did, squeezed the margins.
Okay.
But analysts are actually quite optimistic. They anticipate a rebound and improvement in the second half of FY26 as interest rate dynamics sort of stabilize.
Get any regulatory moves? Yep.
Yes, the RBI has proposed new counterparty credit risk norms. This is for banks involved in derivatives trading.
Why is that significant?
Well, the move aims to align Indian banks more closely with global Basel standards.
Okay, the international rules.
Exactly. They're designed to ensure banks hold enough capital for risks. It'll introduce higher risk weights for certain activities, ultimately strengthening financial stability.
Got it. And now, for something that has a very direct impact on, well, everyone, individuals and businesses.
The GST buzz.
The big buzz around GST 2.0 reforms. What's the latest development that could change things for us?
So the crucial update here is that the GST Council is actively considering exempting health and life insurance premiums for individuals.
Oh, interesting. That sounds like good news.
On the surface, yeah, it sounds like a clear win. Potential significant relief for consumers, making insurance more accessible, simplifying tax, could boost the sector.
Flip the bat. I sense a but.
Well, there's an interesting dual perspective. While consumers might benefit from lower upfront costs, insurers are voicing a concern. A full GST waiver could paradoxically push up their operational costs.
Ow.
Because they might lose input tax credits on services they buy. So it becomes a tricky balancing act between consumer relief and, industry viability.
Fascinating. Okay, let's pivot our attention to the markets. What was the verdict at yesterday's close, Wednesday, August 20th?
Right. So the Nifty 50 closed at 250.6. That was up a modest 0.3%.
And the Sensex?
ESE Sensex mirrored that gain, also up 0.3% at 8.81857.8. And importantly, this marks Nifty's fifth consecutive session gain.
Fifth day. Wow. Mostly IT driving it, you said.
That's right, largely fueled by robust performance in IT stocks.
And the outlook for today.
Indicators are a bit mixed this morning. Gifty Nifty is looking flat, while the Nikkei in Japan is down about 0.5%.
Okay.
Technically speaking, the Nifty is currently seen in a buy on dips zone. There's strong support around 24,800.
And the upside targets?
Immediate targets are set at 25,250 and potentially 25,500. So it suggests a sort of positive near-term outlook, especially with expectations of government support and rising consumption.
And who were the stars yesterday? The gainers.
On the gainers list, we saw Infosys climbing 3.9%.
Strong move.
And Tata Consultancy Services, TCS, up 2.7%. Infosys specifically also sweetened the pot.
Oh, how so?
Announced a generous 80% performance bonus for Q1 that clearly energized investors.
I bet. And on the flip side, the losers.
In contrast, top losers included Farad Electronics, that was down 2.2%, and Bajaj Finance, which slipped by 1.6%.
Standard market churn or anything specific?
Seems like a mix of sector-specific news and just broader market sentiment shifts affecting those particular companies.
Right. What about the smart money signals? Any intriguing brokerage bets catching your eye?
Well, Jeffers is certainly making a bold call. They're retaining HDFC Bank as a top pick.
Still bullish then.
Very. With a buy rating and a target price of Rs 2,400, that implies a projected 21% upside from current levels. That's pretty significant.
What's driving that conviction in HDFC Bank?
It's really a combination of factors. It's consistently strong growth, stable asset quality, and critically,
the merger.
The anticipated synergies from its recent merger with the HDFC Group stocks. Analysts expect this merger to really drive earnings growth, improve return on equity through enhanced cross-selling opportunities, a more robust funding base, maybe lower attrition rates too.
Makes sense. Anyone else making calls?
Yeah, Nomura is equally bullish, but they're focused on the auto sector, specifically Maruti, M&M, and TVS Motor.
Why autos?
They anticipate these stocks will perform well ahead of those GST reforms we mentioned. They expect substantial price cuts for consumers, which could really stimulate demand.
To the caveat.
They do caution that the electric vehicle segment, the EV space, might not meet the current kind of lofty expectations.
Okay. And you mentioned smart money.
Right. We're seeing aggressive buying by both FIIs, foreign institutional investors, and DIIs, the domestic ones, in two specific small-cap companies. Usually indicates high growth potential seen there.
And FIIs specifically.
FIIs, in particular, have been accumulating positions in 5 specific multi-bagger stocks this year. Signals their confidence in certain high-growth stories within India.
Interesting. The IPO market is buzzing too, isn't it?
Oh, definitely. Patel Retail's IPO was subscribed a phenomenal 19.48 times on day 2.
Wow. And the GMP.
Its gray market premium, the GMP, surged 18%. Big indicator of demand. And Vikram Solar's IPO also saw strong interest, subscribed 4.56 times on day 2.
This feels like more than just individual IPO success.
It absolutely signals a much broader and actually very exciting trend in India's energy landscape.
Which is?
The renewable energy sector seems to be on the cusp of a massive Rs 25,000 crore IPO surge.
Huge number.
It clearly indicates its growing maturity and, crucially, investor confidence. Companies like MV Photovoltaic and Juniper Green Energy are already waiting for SEBI approval to go public. Shows a deep pipeline of growth there.
Any other big corporate developments?
Well, Ola Electric saw a significant 28% surge in its stock after unveiling its India Inside vision.
Emphasizing domestic EV tech.
Exactly, domestic innovation in EVs. And simultaneously, Hindustan Aeronautics Limited, HAL, is making a pretty substantial €0.5 trillion bet on India's defense future.
Big bet.
Reinforces that push towards self-reliance and military hardware. Atmanirbhar Bharat's in action.
Okay, let's delve into corporate maneuvers now and maybe some unexpected regulatory hurdles. The big news making waves this week?
Azara Tech.
Azara Technologies, yeah. Their shares plummeted, what, 15%?
A dramatic 15%, yeah. After the Lok Sabha passed that bill banning real money gaming, that's a huge blow to a rapidly growing sector.
It certainly is. What's the fallout been like?
Well, this bill has definitely plunged the industry into significant turmoil.
Turmoil is putting it mildly, I imagine.
Exactly. Companies are, understandably preparing legal challenges.
And the gamers themselves.
Oh, absolutely. There's a noticeable panic gripping gamers who are quickly pulling their funds from these platforms.
An expert opinion.
Experts are cautioning that this prohibition, while intended to curb online gaming issues, it could inadvertently fuel black market activity.
Like the old SATA market.
Potentially reviving something like the SATA market, that illegal betting ecosystem that thrives precisely when legal avenues are shut down.
Can it be easily bypassed?
Concerns about using VPNs, yeah. What's particularly insightful here, though, is the clarification from the MeitY secretary, Krishnan.
What did he say?
He stated, quote, "The problem is online money gaming, not esports. That distinction is crucial."
But still has ripple effects.
Big time. How will this impact cricket revenues, for instance? Dream 11's high-profile sponsorship with the BCCI. That's clearly under a cloud now.
And celebrity endorsements.
We're already seeing celebrities wary of the legal and reputational risks, starting to pull away from endorsement deals. It's really a seismic shift for India's digital entertainment landscape.
Beyond gaming, what else is happening in the corporate world? Any other highlights?
Well, Vedanta's demerger plan, that seems to be hitting fresh turbulence. The government's raising objections.
Okay. Anything positive?
On a more positive note, RailTel has bagged multiple new orders worth about Rs 50 crore total.
Good for them.
And another interesting corporate story, Aditya Birla ARC. They delivered a phenomenal 40% internal rate of return IRR.
40%.
Yeah.
Highest among Indian ARCs.
Highest among Indian asset reconstruction companies, yes. Yet, despite this success, they're planning to surrender their license.
That is unusual. Why?
It's a rare move, yeah. Worth watching to see the reasoning unfold.
Anything else?
In a more challenging vein, Brumby's Bakery, a pretty well-known name.
Right.
It's now up for sale. Its parent company reported a significant $14.9 million loss. Highlights ongoing pressures in the retail food sector.
Tough market.
And finally, a quirky but maybe telling incident. Rapido, the ride-sharing platform.
Yeah.
Fined Rs 10 lakh for misleading ads promising auto in 5 minutes.
Huh. Auto in 5 minutes. Does that ever happen consistently?
Makes you wonder, right? Perhaps this fine signals broader, tighter scrutiny on bold marketing claims in India's booming digital services sector.
That's a great point about the digital services scrutiny.
Yeah.
Okay, let's turn our attention to global currents now.
Mm-hmm.
The intricate dance of geopolitics and those ever-evolving tech shifts that influence us all. A piece of news with significant implications for Indian professionals.
The U.S. visa situation?
Yes. We're seeing a nearly 50% decline in Indian student arrivals to the U.S.,
That's steep.
predicting a substantial $7 billion loss for the U.S. economy, largely tied to an F-1 visa slump.
Yeah, the situation is certainly complex, multifaceted. On one hand, you have the U.S. visa bond pilot program kicking in,
Right.
and a general tightening of citizenship rules. We're also hearing growing concerns within the Indian professional community about H-1B hiring practices.
And something called per-em sabotage.
Yes, per-em sabotage, where, alarmingly, some employers are reportedly undermining immigrant visa applications from within, hindering the green card process for skilled workers.
Wow. That's concerning.
It is. But conversely, there's a counter-narrative emerging from, viral social media posts.
Saying what?
Suggesting that many highly paid Indians in the U.S. are now actually returning home in large numbers.
Drawn back by opportunities in India.
Exactly. Drawn by India's own economic growth and opportunities. It's a fascinating push and pull dynamic at play.
Indeed. Okay, broader global market dynamics.
Yeah.
We saw a tech sell-off, dragging Wall Street lower again.
Second consecutive day, yeah. With the famed Magnificent Seven tech giants experiencing their longest losing streak since April.
Ouch. And Asia.
Asian stocks are looking mixed this morning.
How does this connect to the Fed?
Well, this market behavior connects pretty directly to the Federal Reserve's stance. Minutes from their July meeting just came out. They reveal most officials remain deeply worried about inflation potentially moving higher.
Still worried.
Still worried. And they're actively debating the uncertain impact of President Trump's tariffs on consumer prices.
So disagreement within the Fed.
Some officials observed clear price increases, persistent inflation concerns. Others viewed the tariff-induced price hikes as potentially temporary. This internal debate is crucial.
Especially with Trump's criticisms.
Exactly. Especially as Trump continues to publicly criticize Fed Chair Jerome Powell, blaming him for, quote, hurting the housing market by keeping rates high, creates a challenging environment for market predictability.
No kidding. And quickly, other major global headlines. What's happening geopolitically?
Israel has initiated a significant military operation in Gaza City, mobilizing reservists.
Okay, and in the U.S.?
In U.S. domestic politics, that ongoing battle over political gerrymandering continues fiercely in Texas.
Map redrawing.
Yeah, the House approved redrawn maps widely seen as favoring Republicans. Interestingly, former President Obama is publicly backing California's counter-effort to redraw districts in response.
Always complex. Anything on the cybersecurity front?
Yes, and this is critical. An alert from the FBI warns that Russian FSB hackers are actively exploiting a Cisco vulnerability.
Targeting what?
Targeting U.S. critical infrastructure. Their aim isn't just data extraction. They're potentially gaining long-term control.
Control of what systems?
Particularly over industrial control systems. Things that manage essential services like power grids, water treatment plants.
That sounds incredibly serious.
It raises a really important question about the escalating cybersecurity threats in our volatile geopolitical landscape. Just how vulnerable are the unseen systems that underpin our daily lives?
A sobering thought. Okay, let's unpack this. For our final segment, let's zoom out from the volatile markets, the complex geopolitics, and dive into something truly groundbreaking, something that could fundamentally change the future of health and maybe our understanding of aging itself.
Right. What's truly fascinating here is a remarkable discovery coming out of UCSF, University of California, San Francisco.
Right. What did they find?
It's about a protein called FTL1. Scientists have identified this specific protein as a surprising and maybe central culprit behind brain aging.
A culprit protein. How does that work?
Well, to simplify it, in preclinical studies using mice, an excess of this FTL1 was directly linked to memory loss, the weakening of crucial brain connections, and just generally sluggish brain cell activity. All the hallmarks of cognitive decline we associate with aging.
Okay, so too much FTL1 is bad for the aging brain.
Exactly. But here's where it gets really interesting and potentially revolutionary.
Go on.
When the researchers developed methods to actually block the FTL1 protein.
They could block it?
Yes. The animals didn't just stop aging in those aspects. They actually regained useful traits.
Regained, you mean reversed?
Their memory improved, their brain connections strengthened, their brain cells showed renewed vigor. So yes, it wasn't just slowing down aging. It looked like potentially reversing certain aspects of it.
Wow, that's huge.
It raises an incredibly important and, frankly, hopeful question. Could this protein be a tangible pathway to reversing cognitive decline in humans?
The implications are staggering.
It's a remarkable, almost paradigm-shifting step in understanding the mechanics of aging at a fundamental cellular level, moving us beyond just managing symptoms towards potentially addressing a root cause.
Truly groundbreaking stuff. And speaking of innovation reshaping our world, just a couple more quick tech tidbits. Consider this. Did you know Aadhaar eKYC is now joining hands with Elon Musk's Starlink?
For customer onboarding.
For seamless customer onboarding, yeah. That's a powerful convergence, isn't it? National digital ID with global satellite internet.
It really is. And Bitcoin.
Or that Bitcoin has surged beyond $120,000.
$120,000? Why?
After a government order validating crypto as a legitimate retirement asset.
Whoa!
These aren't just niche tech stories. They're signals of how rapidly digital infrastructure and new asset classes are transforming our financial and technological landscape, practically right before our eyes.
Constant change.
So from the intricate dance of tariffs reshaping global trade and corporate strategies to the astonishing breakthroughs in brain science challenging our very understanding of aging. We've certainly covered a lot of ground in a short time today.
We definitely have.
Hopefully you're feeling a little more well-informed out there and perhaps a lot more curious about the forces shaping our world.
Yeah, and if we sort of consider the overarching narrative of today's deep dive, from these strategic geopolitical maneuvering, the economic rebalancing, to these rapid technological and scientific breakthroughs like the FTL1 protein, it just highlights how swiftly our understanding of the world, from global finance right down to our own biology, is evolving.
It's moving so fast.
Incredibly fast.
Yeah.
So the question to ponder might be, what implications could these rapid, often foundational shifts have for your own future planning?
How so?
Both personally, maybe in terms of health and longevity, thinking about things like FTL1, and professionally, in just navigating an increasingly dynamic and frankly unpredictable global landscape.
Something to chew on for your commute. Thank you for joining us on this deep dive.
Thanks, everyone.
We'll be back tomorrow with more crucial insights.